All right, good day and welcome to my YouTube channel at Illumination Outline G, where I will be bringing to you educational videos, most especially in the field of accounting. And for all students around the globe, those who are willing to learn accounting and how to close accounting transactions or probably have knowledge, foundational knowledge on the field of accounting. Now, today I will be showing you how to post from your ledger account to the trial balance. And I'm also going to be showing you um, ways by which you can identify transactions based on the categories and how you can easily make your postings to the trial balance without any form of error. So let us go ahead and do some work. Okay, now right here, I have a question here on the screen. And also, we'll try as much as possible to start from the beginning and expose you to what you need to understand by the word trial balance. Now, let me on a slide. Now, we can see that a trial balance is defined as a list of schedule of all debit and credit balances that are extracted from the ledger account. And it's just a summary of all the debit and credit balances that you are bringing from the principal book of account, which is the ledger. And it is prepared at every end of the accounting period, okay? And items recorded on the debit side as a balance on the debit side and on the credit side are extracted and transferred to the trial balance. And that's why we say that the trial balance is just a test of the arithmetical accuracy of all transactions that are posted to the ledger. Okay. Now, we can also say that the purpose of a trial balance is to ensure that all entries made into the company's general ledger are properly balanced. Because most of the time you see questions that are self-balancing transactions, and there are cases whereby, in regards to the question, the accounts may not balance. And in this case, students are allowed to draft or prepare a suspect account. Okay. Now, but most of the times you're going to come across questions that are self-balancing account. Okay, that is, you don't have to have any balance carried down or prepare any suspect account to be able to get the final figure on the debit side and final figure on the credit side, and then balance of account. Okay, now um, there are various ways by which we can prepare go about this. But one of the areas that I found that is quite tasking or quite difficult for students is bringing out transactions from the ledger account and posting it down directly to the trial balance, except in cases whereby you are given the information directly without having to decide on your own to arrange properly the transactions that have occurred and have been posted to the ledger account. Okay, so but in this video, we're going to be looking at that and how to post from the ledger account to the trial balance. Okay, so right here you can see that, like I mentioned, that the trial balance, as you can see here, sorry, okay, sorry. So this is the trial balance, okay? So let me just mark this. So let's just jump down into the to the workings and do some questions so that you can have an idea as to how to post directly from the ledger account to the trial balance. Okay, so we're working with my part. So let us go ahead and without having to explain too much because I'm just going to try as much as possible to make this video short. Okay, so let's go ahead. Let's move on. So right here we have some questions here. Okay, the first question says cash purchases. Okay, we're going to prepare ledger account, then we're going to subsequently post it to the trial balance. Okay, so right here I have cash purchases. Okay, so we have cash purchases. So let's go ahead. So I have cash purchase, okay. So let's say cash. I'm gonna be having two accounts here. Cash account, okay. Then we're gonna also have purchases, okay. Purchases account, okay. So just deal with me with my drawing, okay. Purchases account, okay. So we have the the debit side, and we have the credit side, we have the debit side, and we have the credit side, okay. So let's put the naira sign, okay. Naira sign, okay. Let's put the naira sign. So I'll try as much as possible to make this video short and also make it more clear for you so that you understand. Now, when we purchase cash, okay, when we make cash purchase, that we purchase with cash, okay, in this case, we know that double entry principle says that for every debit entry, there must be a corresponding credit entry, and for every receiver, there must be a corresponding giver, okay. Now, we are paying with cash by purchasing, okay. So we have two accounts involved here. We have the cash account and the purchase account, okay. For the cash account now, we are going to be paying with cash. We're going to credit. So we credit with the value on say purchases, and that is 3,000, okay. So 3,000, and for the purchases, okay, purchases now we have purchases, we have cash, okay, we have cash, and that is how much? That is 3,000. So we have balance carried down on the credit side, purchase balance carried down 3,000, okay, now balance carried down 3,000, okay. So let's go ahead. We also have another cash sales, okay. Now in this case, let us just, so we're going to be having the account in one place, okay. So let me go ahead and let's take this off. Okay. Let me prepare that very well so that we can have enough space. Okay. Okay, all right. So let's move on. So let's move on. We have the Naira sign. I'll try as much as possible to manage the space. The Naira sign, okay. So we say we have purchases of 3,000. We have purchases. That's 3,000. Okay. So we have cash. That is 3,000. Okay. Okay, 3,000. Okay. So the next question says we have cash sales. Okay, that means that we have to also have another account that is sales. This is a sales account. So I'm going to draw the sales ledger account here. Sales account. Okay, sales account. We have debit. We have credit. Okay. So sales account. So when we sell, we are receiving cash and we are giving out the stock items. Okay. So in this case, we are receiving cash to debit cash account. So we say sales. That is 10,000. So to comply with the double entry principle, we're going to credit debit sales account and credit debit cash account. And we're going to credit sales account with cash equivalent cash. That is 10,000. Okay. Put the naira sign. Okay. Put the naira sign. Okay. So we have wages paid with cash. Again, we paid wages cash for wages. In this case, we're going to have wages account. Okay. Wages account. Okay. So we have wages account here, wages account. So we paid for wages, which is an expense, okay, or expenses. So debit, we have credit, okay. So for wages now we have cash, we pay cash, of how much? That is 200 naira. Okay, 200. Okay, naira. So we confirm with double entry principle by what? By crediting cash because we paid with cash for wages. Okay, wages. That is 200. Okay, so you can see that. So the next one said that we paid insurance with cash. Okay, so we're going to come down here again. Let's work on this. So let's try to manage the space. Insurance account. Okay, insurance account. So we have debits, we have credit. Okay, so we pay insurance also an expense. Expense. Okay, we paid insurance with cash. We paid how much? We paid 800. 800 naira. Okay, 800 naira. Okay, so let us leave. We're going to balance later. Then we come down to cash again. We say insurance. Insurance. Okay, we paid how much? We paid 800. Also, we have Adeola. We paid Adeola by cash, so we're going to prepare an account for a personal account for Adeola. So we can call this Adeola. So let me go in and do that. So sorry, uh, Adeola account. Okay, so let's just manage that space. So we have debits, we have credits. Okay, so we paid Adeola with cash. So we have cash. How much is that? We paid 300 naira on debit side. So balance carry down. That's 300. Okay, 300 naira. So let's close that. Let's close that account. So let's close that account. Okay. So now come to cash again. We say Adiola. We paid Adiola, because the amount of 300 naira is what is going out of the cash account. Adiola 300. Okay. So now we're going to be having a balancing figure. Okay. We say balance carried down. Balance carried down. Okay. So we had up 3,200, 4,300 minus 10,000. Take 4,300 from 10,000. We will be left with 5,700. 5,700 balance. Okay. So let's just manage to close that. That's 10,000. Okay. 10,000. So yes, so let's close this. 10,000. Okay. So closed. So we have a purchases. Let us close that. So balance carried down 3,000. So we close this. We close this too. So we have wages balance carried down. That's 200. Okay. So we close that too. We close the account. So for sales, we have cash, okay? So we have 10,000. We close that, we close this too. So for insurance, we have balance carried down. We have 800. Okay, so we close that, we close this. So let us now go ahead and work on the trial balance, okay? So let's go ahead and work on the trial balance. Okay, so for the trial balance now, let us quickly draw the trial balance and post directly to the trial balance. Okay, trial balance. I'm going to try to manage the time. Okay, so we have the two sides, debits, credits. Okay, we have cash. So we have a cash of 5,700 balance. Okay, we have sales. Sales will come to the credit side as 10,000. Okay, we have wages is an expense. At the expenses will come up to the debit side. That's 200. We have Adiola. That's 300. What do we have again? We have insurance. We have insurance 800. Okay. We also have purchases. Okay. Purchases. Chases. That's 3,000. So that's 575962 7,000 10,000. At the end of the day, you can see that our account has balanced. So 10,000. So this is how you're going to prepare your trial balance. That is, note that all items of assets are going to be debited.